morning and welcome to this brand new edition of the newspaper show right here on ET Now. I'm Cheryl D'Souza and I'll take you through all the top stories that's there in the Economic Times this morning for you. But let's get going with the top 10 headlines that's there in the paper. And first up, RBI to government saying the cut stake to 26% in PSU banks. Reliance Industries Q1 profit jumps 31% on BP deal gain. HDFC profit dips 5% in June quarter. You have color TV imports back in restricted category. COVID flattens the US economy. GDP crashes 33%. Airtel to comply with order on Huawei and ZTE. That's the word coming in from the Airtel CEO. June smartphone imports at 3-year high. Local curbs stall demand engine, consumer CEOs. Improvement will happen if lockdown ends. That's the word coming in from Parekh. Nielsen cuts FMCG growth forecast to near flat. And those are the top 10 headlines that's there in the Economic Times. Let me move forward and take you through the top market headlines that's there in the paper. And first up, Reliance Jio profit nearly triples in Q1. You have banks, NBFCs hit a bump on road to recovery. You have brokerages less bright on Maruti. Prabhat Dairy's lactalis deal under SEBI lens. And LVB Clix extend exclusivity period. From market now on to corporate headlines. Tata 70,000 crore rupee annual sales growth under Chandra. Tata Trust reject mystery charge of interference. Lenders to liquidate Nirav Modi's Firestar International. PE firm Advent to buy RA Chem. And Sikkim virus spread may hit drug supply. Alright, those are the top stories is there in the Economic Times for you. But let me get you the top story this morning, and definitely that will rule the markets as well, and that is Reliance Industries. Big boy Reliance Industries reported a Q1 earnings yesterday, and for details on that and how were the earnings, I'm joined by my colleague Ajay Sharma. Ajay, take us through the earnings of Reliance Industries.
But Reliance Industries' first quarter numbers actually was a mixed bag. There was first a very big component of exceptional gains in the net profit number, for which the number looked ballooned at 13,000 crore, but the real number was closer to 8,200 crore versus our estimate of 7,700 crore. I would still go with inline profitability. The top line growth was actually much lower. Even the gross refining margins at $6.3 was lower than the number of 6.5, 6.6 what we were working with. If you look at the segmental performance, Jio number was clearly which stood out this particular quarter. Subscriber addition was strong, ARPUs were higher than what we were actually estimating, and the number of usage, etc., overall volume growth was very strong. So if you look at the EBIT margin of Petchem, refining, retail, all three were lower than what we were actually estimating, which clearly shows that it was a Jio-led quarter which saved the day for Reliance Industries this quarter, because otherwise all the three ends of the business were really collapsing. In fact, even in the commentary of the results, Mukesh Ambani did say that traditional hydrocarbon business has actually borne the brunt of lockdown and demand collapse. But even part of the consumer businesses, which is Reliance Retail, and because of the nature of the business, apart from grocery, everything else was shut. JioMart also started contributing towards the end of the quarter. So retail was not working, Petchem was not working, refining was under pressure. They tried to change the mix of the hydrocarbon, and in place of domestic, they exported a lot of stuff overseas, saved the day. But overall, it will go down as a weak quarter. Numbers look mixed, but Street knew that there was some amount of weakness to set in. So it will be interesting to see how the Street reacts to the extent of weakness which has been demonstrated in the segments and the strength in work from home led Jio. Whether this strength in Jio continues even when normalization happens in the quarters ahead, and how much of mean reversion in other traditional businesses happen is something which the Street would want to know. The valuations are pretty nicely rich because of the transactions which have been announced in the big run-up which has happened.
Thank you, thank you, Ajay, for that Reliance Industries review. We'll definitely watch out for the stock when the market opens today. But let's shift focus now to HDFC. That also came out with its Q1 earnings yesterday. And how were the earnings? My colleague Soumya Sharma is standing by with a detailed review of HDFC's performance. Soumya?
Well, in a rather tough and challenging environment, HDFC Limited has reported a decent set of numbers. As far as the net interest income is concerned, it came in about 3,392 crore rupees for this quarter, which was pretty much in line with our ET Now poll. However, on the profit figure, the company reported profitability of 3,051.5 crore rupees, which was above our expectations. Well, as far as provisioning is concerned, including for COVID-19 provisions, the overall provision stood at about 11,099 crore rupees for the June quarter, which was pretty much, I would say, is a decent provisioning. However, there's a slight dip sequentially. So compared to the last quarter, the provision has come down slightly, but on a YOY basis, it continues to remain at an elevated level. Well, the overall total loan book growth was at about 12%, of which individual loan growth accounted for 11%, and the total loan book growth was primarily driven by the non-individual book, which witnessed a growth of about 15% on a YOY basis. Coming to the asset quality, pretty much steady trends here. However, on absolute GNPAs, I would say there was a sequential uptick of about 3%, but nevertheless, on a ratio front, the company reported a steady asset quality. The non-individual book NPA was at about 4.1%, so this is something that we'll have to watch out, and what are the kind of asset quality trends that the company is seeing. So this is something that we'll have to watch out on the management commentary on this part. As far as disbursements are concerned, well, the retail business June 2020 disbursements were at 68% of June 2019 disbursements. However, the company did mention that they are seeing a slight increase and uptick as far as disbursements are concerned from July onwards, which really indicates a positive momentum. Talking about the moratorium, which the entire street is really interested in, the total AUM under moratorium 1 stood at about 27%, and now under moratorium 2, this figure has reduced to 22.4%. The individual book under moratorium stood at about 16.6%. Even this also reduced compared to what it was that was reported earlier and under moratorium 1. So definitely improving trends that we are seeing going forward, and HDFC Limited
thank you for that detailed review of HDFC earnings. Yesterday the earnings came during market hours, but definitely need to watch out how the stock reacts after brokerage reports. Let's shift focus now on to an interesting piece coming in from HDFC chairman's speech at the AGM, page 6 of Economic Times. This is the story that my colleague Varun will be joining in to talk about. And Varun, Deepak Parekh saying that recovery signs are visible, improvement will happen if lockdown ends. Definitely a good piece of information, something to soothe frayed nerves, Varun.
Yeah, Cheryl, of course. When good morning, firstly. Secondly, when Deepak Parekh comes forward and says that, he's focusing on the green shoots and recovery, it is a very positive sign, because he's obviously at the helm of a lot of knowledge that is sitting within the HDFC Bank books. They know what kind of borrowing capability people have. They understand whether the potential to pay back is there or not. They're seeing increased demand in their various sectors because they're so well diversified. So I believe he's a very good person to comment on economic recovery, because they just loan to so many different categories that they can literally tell you what's happening in each different sector, because ultimately credit flow goes to every single sector. So that's what he's coming out and saying. He said we must raise capital. Guys who can go out and raise money right now and make sure they have a nice arsenal to fuel future economic growth need to do that. Guys like HDFC, Kotak, Nielsen now have all raised significant amounts of money. The only challenge Deepak Parekh cites off is that if lockdowns continue, and particularly these lengthy lockdown regimes, that's something that can be a major setback for us. But he's saying don't pay too much attention to these GDP forecast numbers right now, because obviously Q1 was shut. We all know that. All of us were sitting at home. Nobody was going to office. Nobody was shopping. Nobody was going out and spending money. So how do you expect GDP to be good? So we know that it's going to contract. What I think he's trying to say is that we shouldn't pay too much attention to that number. Things have changed now. The situation's improving. Unlock is happening despite the number of cases that are there in the country every day. People are ignoring that, and we are opening up. and gradually we should see the economy recovering on the back of that.
Alright, thank you Varun for taking us through the statements made by Deepak Parekh at the HDFC AGM saying that the green shoots are visible. Let me shift focus on to now page 13 of Economic Times, and this is the story that I'm going to talk about is Tata versus Mystery. That particular case, and defending N. Chandrasekaran, Tata Sons have said the sales expanded 70,000 crore rupees annually during 2017 to 2019. The Tata Group is countered in the Supreme Court Mystery's charge of poor performance. So what have they exactly told? I'll tell you directly off the paper. The Tata Group of companies under Tata Sons chairmanship of N. Chandrasekaran has seen an annual incremental growth of around 70,000 crore rupees between 2017 and 2019. Further, return on equity of funds infused by shareholders has risen to 46%, excluding the impairment during this period. This was stated by the Tata Sons in an affidavit filed in the Supreme Court on Thursday in response to earlier submissions by Cyrus Investments and other Sarkoji Palonji Group companies. The current management has been taking decisive actions to strengthen and solidify the core businesses and foray into new businesses, correcting the capital structures of both listed and unlisted companies to eliminate risk on Tata Sons. This is the affidavit submitted by the Tata Sons in the Supreme Court. They've countered in Supreme Court on Mystery's charge of poor performance. That's the latest coming in on that particular front. But let's shift focus to a story that's there on the page 1 of Economic Times, and this is a story talking about the color television. The imports of color television is back in the restricted category. So how big is this particular significance, what significance it is? I'm joined by my colleague Vivek to take us through this particular story. Vivek, this looks like a move to actually boost local manufacturing. So color TV is now back in the restricted category, the imports rather.
Well, good morning. Absolutely. What's actually happening is that the government is looking at various ways to give a boost to the Make in India movement that the government has come up with. So now what has actually happened is that the government has put an import restriction on certain categories of color television, and these curbs are applicable to TV sets included in the other color category that actually covers LCD TVs among the goods. So there is no restriction on monochrome TVs. However, if you're talking about the total imports under this particular restricted category in fiscal 2020, it was close to $781 million. And mainly, the countries from which these television sets were being imported are China as well as Vietnam. And India believes that television sets produced in China were being imported via the Vietnam route. Why is it important? Almost 35% of the total TV sets sold in India are imported. So this will give a very big boost as far as the entire Make in India or Atmanirbhar Bharat manufacturing boost is concerned. Interesting to see how some of the stocks that act as third-party manufacturing units perform in trade today. It could be a very big boost to players like Dixon Technology, even to a certain extent a player like Amber Enterprises as well.
All right, Vivek, definitely will watch out for these stocks that you've mentioned when the markets open, and thank you for taking us through that particular story. Now let's shift focus on the FMCG sector, and research for Nielsen has revised its growth target for the FMCG sector for the year 2020 for the third time. What are they expecting right now, and what are they saying about the FMCG sector? I'm joined by my colleague Neha Tyagi to take us through the details. Good morning, Neha. And Nielsen has gone ahead and revised the forecast for the third time in a row. What is it this time around?
Well, as per Nielsen's latest numbers, the FMCG industry is expected to register a flat growth for the year 2020, of course led by the lockdown that was imposed across the country towards the end of March due to the outbreak of COVID-19. There was a lot of disruption caused as far as supply and distribution is concerned. But do remember, this is Nielsen's third downgrade as far as the growth forecast for FMCG industry for the year 2020 is concerned. Earlier, Nielsen said that FMCG FMCG industry was expected to grow to the tune of 9 to 10% in terms of value. Then it was downgraded to 5 to 6% in April, and now it has been downgraded to a flat growth for 2020 as per their latest numbers. But the researchers also said that while April and May have dragged down the growth for the entire FMCG sector, they have seen signs of revival in the month of June. Nielsen said that while growth fell to 27% in April and May, June has registered a value growth of 4.5% year on year. Nielsen also said that rural consumption has surpassed that of urban. Rural, that contributes about 36% to overall FMCG sales, grew 3 times of all India FMCG growth in the month of June. Nielsen also said that going forward, they expect better growth in Q3 and Q4, especially Q4 because of the festive season. But Nielsen also said that going forward, one will have to keep a watch in terms of the number of positive cases increasing day by day, as well as the small ad hoc or localized lockdowns that have been imposed by several states across the country. But as of now, the growth forecast for FMCG industry for the year 2020 has been downgraded to flat growth.
All right, thank you, Neha, for taking us through those details of what Nielsen is expecting for the FMCG sector. But staying with the consumption space, the local curbs have stalled a demand engine. That's the word coming in from consumer CEOs. And to talk more on this, I'm joined by my colleague Winnie, who tracks this particular sector very closely. Winnie, a few weeks back, we had reports trickling in that the consumer demand was indeed hurt by the lockdown imposed by certain states, and now you have a confirmation of that, and you have the confirmation of that particular sentiment coming in from the consumer CEOs. So what are they exactly saying?
So, you said it very rightly. Now we are seeing a good demand in the month of June, but July did see a lot of localized lockdowns across the nation, and that is impacting a lot of companies, consumer companies. Because they had started their factories, they had started manufacturing, everything was coming back on track, but it was like 2 steps forward and 1 step backward. That is what happened. So, now they have to shut down their factories in certain areas. Demand plus overall lockdowns going on in states like Maharashtra, West Bengal, Tamil Nadu, Assam, UP. These states are seeing, still there is some lockdown over there. So over there, demand is quite uncertain. Factories are shutting down. Business cycle, continues to be impacted. And that is why, demand is in a bit of a slow lane over there. Now, we have certain comments from, the MD of USL, who did say that, they had all their factories running, and suddenly many factories closed in Karnataka and Assam because of the local lockdown. And now these have reopened again. So there's very uncertain times. But, this is surely impacting the consumer sentiment as well, because they are not very sure of what is happening. And, that is why overall the sentiment seems to be weak. And also they say that supply chains are certainly now getting impacted in certain areas as well. And overall, it is just impacting the sentiment. So they are still worried about the current scenario of demand with these localized lockdowns, is what you could say. So all in all, let's see how actually these localized lockdowns impact the earnings as well. Even Parle is talking about these localized lockdowns impacting them, demand being sporadic and random. So we'll keep a close eye on, what actually pans out further for FMCG companies.
All right, Winnie, we'll definitely watch out what's going to happen for the FMCG companies going ahead. But let's shift focus now on to an ET exclusive that we had basically broken on the channel, that the Prime Minister was all set to meet the regulators yesterday. But what are the details out of that particular meeting? What did the regulators have to say to the Prime Minister, and what was the Prime Minister's observations? Let's take it across to my colleague Karishma. Karishma, good morning, and take us through what was discussed in the Prime Minister's meeting with the financial regulators.
Well, good morning. The main and the biggest agenda that the meeting had was on suggestions regarding the functioning and liquidity that Prime Minister considered. What we are not just picking from reports but also learning from sources is that all the regulators that were present in the meeting, be it SEBI, RBI, IRDAI, that is the insurance regulator, all of them presented an hour-long presentation mentioning about suggestions to Prime Minister in presence of Finance Minister Piyush Goyal, Commerce Minister, and Nitin Gadkari, who is the Road Minister. Now, the biggest point that's coming out of the meeting is that the RBI requested that government should cut its stake in state banks to 26%, and in fact also requested that the government should be looking at ways in which they can extend more liquidity help to the banks. Now, second important point that has come out of this is the sectoral issues that were also discussed in the meeting, where just the day before, if you remember, the bank had also put in suggestions, and that was further investors and with the RBI. So these are few things that we are picking up with confirmation that RBI did present this, and what we're learning also is PM had mentioned and stated that we would fully cooperate in understanding what the industry stakeholders and the authorities want.
All right, Karishma, thank you for taking us through that story. Let's shift focus and let's talk about the US GDP growth for Q2. Saw a record contraction for the first time since Great Depression. To talk more on that and what's the actual number, I'm joined by my colleague Varun. Varun, take us through the details. Record contraction coming in for US GDP.
Right, most definitely. Q2 GDP is contracted in the US by 39.2%. which is much larger than anyone's estimate. Essentially, that wipes out 5 years of growth because the US GDP doesn't grow like India at 5-6%. It grows at a much lower rate. So over here, a larger cut in GDP growth erases a lot more growth than it would for us over here. I mean, same reasons we were just talking about Deepak Parekh saying that we should not be focusing on these GDP numbers. So the U.S. market yesterday, when they first got the blow, Dow fell 400 points, futures fell 400 points. By the end of the session, Dow had recovered to just a 200-point fall, and the futures were showing 130 points positive right now also as of this morning. That's because your FANG stocks came in with amazing earnings. Facebook, Apple, Amazon, Google, PayPal, all amazing earnings from these tech index heavyweights. So that's what kind of countered the move. And so you have to choose which side of the fence you want to sit on. The unemployment is still very high in the U.S. The GDP has fallen the most since 1921. But you can either focus on that or you can focus on the recovery right now, which is also kind of what the futures are indicating. So it was a shock. All these ET Now speakers who've been coming have been telling us this Q2 GDP number is going to be a huge shock. So that's what we've seen last night. And let's see how the market digests it the rest of this week and next week.
All right, thank you, Varun, for taking us through the details of the US GDP, what this come out at. Let's now shift focus and let's take a look at the top 5 headlines in the Times of India for you this morning. And first up, it is India's COVID toll, 5th highest in the world now. You have government that's saying the recovery rate is at 64%. The CFR falls to 2.2%. Karnataka, Bihar, Bengal, Andhra, new hotspots. Government looks to expand small business loan coverage. And lastly, US President, that is Donald Trump, wants to delay US elections. All right, and that's the top 5 headlines that's coming in from the Times of India this morning for you. And with that, we're out of time with this edition of the newspaper show. Thank you for watching.